Hey traders, Nick Shaheen here. Create income with option spreads on MarketFi.com. Recapping the week ending July 11th for Benzinga and looking into next week, which will be the monthlies in July. Um, Needless to say, this was a bearish week and following a bullish week from the week previous. However, the bearishness level this week beats the bullishness level of the week prior, especially when we look at the small caps, and I'll run that down later. But before I forget, if you have any questions for me, you can reach me through MarketFi. I have an excellent messaging system if you're registered. You don't need to pay to register. Or you can email me directly at sellspreads@gmail.com and follow me on Twitter, of course, and StockTwits. My handle is RacerNick, no K, RacerNick. I answer all questions promptly. Okay, let's get this out of the way and look at, I believe this probably would be a better place to start here. Okay, looking at what happened today to end the week. Yesterday obviously was a scary day in the morning. If we want to look at that, I'll expand the time frame to encompass that. And it looked like the world was ending before the open. This is the ES, this is the S&P basically. And we had a huge drop. What happened? There was nothing new. I wrote about it. It was stuff that we knew, only the headlines came all together at the same time. For example, Portugal, we knew it was iffy. As a matter of fact, apparently the bank in question was, was in question from a long, long time ago, even here. So that wasn't new, except it was in the news yesterday. So it was new, old news rehashed. We know that the China numbers are always iffy. So that came out also with bad economic numbers. So who cares? It's always iffy. The other one was that European economic data came out bad. We always knew that they are behind us as far as recovery, and even ours, U.S. recovery, is tepid at best. So they're lagging. So it wasn't that far-fetched to see a few numbers that are not going to come in as rosy as possible. So it wasn't the end of the world, but all the headlines came together. And also there were some, war issues on the Israeli front, and not so much from the Arab world. I mean, not so much from the ISIS front, but from the Israel-Gaza front, which, by the way, climbs to the top of my list of dangers as far as headlines, because I've tracked the area for a while, and this is some serious headlines coming out of there. I don't like what's going on. But what the market didn't like yesterday is the sell-off. And even though it was a huge sell-off, I believe the IWM was down 2.2, 2.3%, and then recovered to cut the losses in half. It still closed down 1% on the RUT2 for the small caps, but half as bad. So the feeling was bullish because we stabilized and recovered. Well, here's my thought about this. It's not, and I also wrote this up. It's not so much that the bulls bounced. It's the bulls are failing to win, and the bears are just doing enough to keep them suppressed. So what do I mean by the bulls are failing to win? Whenever they have a bullish week, they're failing to follow it up with another bullish week. And as a matter of fact, if you take it down to the momentum stocks, the momos, they're failing to hold the greens overnight. So, they have one green day, they'll have the next red day and give it all or most of it back out. Let's test this theory. Today, Amazon was up 5%, and let's see what happens Monday, Tuesday, Wednesday. So hopefully I'm wrong. I don't have any positions in Amazon, but just in general, the greens are getting offset, especially in the momos. So the bears are doing just enough. They're not pressing the issue. So the bulls are failing to win continuously, are failing to maintain the winning streak, and the bears are not doing enough to press the issue whenever they have the upper hand. I'm neither bull or bear. I sell spreads. You've tracked me for a while, so I'm interested where stocks are not going, and I'm selling spreads out there and letting time do my work for me. And all I have to do is just make sure my spreads don't get engulfed in the price. And so what I did have short positions and long positions yesterday, and neither were tested. Maybe I had a credit put spread in the RUT that got tested a little bit, but I had time on my side and I had it hedged. It was kind of an iron condor, only staggered in time, so I didn't get damaged too much. So I advise everybody to do the same. Hedge everything, regardless of conviction. I don't take positions into the earnings, full positions. I take lotto tickets into the earnings. Keep that in mind. Why? I'm jumping around here, but this is important to mention right here. The earnings, I've said it before, I'll say it again. Even if I have a copy of their P&L, I don't know how the market's going to react to those numbers. Like Wells Fargo today. Somebody that knows the company inside and out would have thought they were going to buy the stock, but they didn't. So at least not at the open. I don't know what happened at the end of the day, but regardless, so it's a coin flip how the market is going to react to those numbers, not to the beat, but reaction to the numbers. I don't know how it's going to come out. So I don't play earnings unless with lotto tickets. And speaking of lotto, I did today start building in Google. I built a bullish position in Google based on a coin flip, not based on any intelligence. Long term, I know the company is a winner. What's going to happen next week? I have no idea. Flipped a coin, took the long. Not really like that, but I have a couple of short positions that may get tested next week, maybe, if the markets run. So this will be a hedge and a lotto ticket at the same time. Why not? So I'm spending a few $100s, but this is money I threw in the toilet, basically. I'm not going to go after it unless it's a winning ticket. Then I'll reach in and grab it. But it's a lotto ticket that cuts both ways for me. But don't take full positions. Definitely don't take credit spread positions into earnings. I don't care how far away from trouble you think they are. There's a chance they're going to get engulfed, and you can't do anything about it unless they're longer in time. So that's my 2 cents on earnings. Regardless, the week was bearish, very bearish, best seen and represented in the small caps. So this is the S&P. You saw the bearishness down here. This is the small caps. If I expand the time frame, the spread was huge, and it also recovered and cut it in half. And let's flip to see the damage this way. By the way, the last couple of, actually the last 3 candles in the small caps have been dojis, basically, in nature, which are, tell me, market indecision. Why? Quick doji. Let's do it some other time. I don't have time right now. So today's Friday's candle is definitely market being indecisive. They opened, they ran it down, they bought it back up, and they said, you know what, I don't know what's going on, I'll just close it just about where it opened. So it's the candle looks kind of weird on this chart, but anyway, it was basically an ugly day. If you're bullish, you'd think you'd expect some sort of a bounce after a really red day yesterday and all the headlines have abated, but we didn't get it. They tried to. The Nasdaq fooled us into thinking that it is bullish, but it's a handful of stocks that account for all the greens in the Nasdaq and the NDX, and especially like Amazon up 5%, and it's a heavy duty guy. Even Microsoft, it's a big square. Google up 1%, whatever it ended up the day at, and it's a heavy duty. It's got 2 tickers in there, giant boxes. Apple was a fizzle, so it was not as bullish as people would have expected. Now see that orange line that just highlighted right here? This is the small caps, by the way, Russell 2000. It broke trend right here, and now we've had 3 or 4 candles heading down in that trend that I had highlighted a couple weeks ago. So I don't like it. It broke trend up here similarly, and it continued on down. So now we're back to playing between those 2 blue boxes that I've had going on from a while back, and I don't know if it wants to come down here, but the open interest suggests to me that maybe next week's playground is going to be here. So I don't want to take too many bullish positions. Matter of fact, I added a few bearish positions, but I do have a handful of bullish to offset some of it, so I have time to react either way. I think we're going to go back to stalemates unless we get a headline. So to show you the damage, which is what I started saying, best seen on a weekly. I changed from daily to weekly, and that's a big red candle. giant. It deserves some respect and breaking a trend. So lots of lines, but the concept is the same. This is a big red candle. This is a big red candle. Giant red candles are scary, especially when everybody's upbeat. Just a couple weeks ago, not even a couple weeks ago, everybody buy, 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 so bullish, and then suddenly, phooey, everybody sell, sell, sell. So switcheroos like that should scare the hardcore bullish people. By the way, note on bullishness and bearishness. The bull of 2014 is starting to sound and smell like the bear of early 2013, meaning they're bulls just because. There's no reason to be more bullish than you were yesterday. Absolutely no reason. Okay? And yet they keep reaching for the sky. I see tweets out there going, I'm going to reach higher, opening all these call positions. I don't see any offsetting trades. Well, the mistake that the bears did last year, they kept shorting, oh, we're all-time highs, all-time highs, all-time highs. And guess what? The all-time highs stayed for a long time. So hedge in case you're wrong. So it's foolish to take one position and stick with it, unless you have intelligence to it and it's a specific strategy. So the small caps showed us the weakness and the ugliness of today and this week. Last week, if you remember, this is play of the week, I told you to pick on weak stocks like Tesla, and I did, and I won, and I wrote it up, and maybe I'll make it public soon enough. It was a complicated trade that cost me nothing. I couldn't have lost money unless Tesla did nothing. And I basically bought debit spreads, financed them with credit spreads as far as puts, and then added income by selling more bearishness by selling a credit call spread. So I added some dollars at risk in order to finance the whole thing, and it was cost neutral. I cashed in the bearishness because this is Tesla today, and let's see over the week what it did. Straight down. I needed it to come down to 210 for maximum profit. It came down to 214, close enough for me. Boom, I exited. And I reset for this coming week. Started to. I haven't finished it, but I'm already shorted via something. So what do I do for next week? I told you the open interest in general is telling me it looks like the playground is going to be a little bit lower than this week. So I want to go along with what the open interest is telling me right now. So what I'm doing is I'm adding exposure to the risk to the short side. So I'm adding some shorts, but not completely ignoring the longs. I added some longs, but conservative longs. I am more scared from whooshes downwards than leaps up. Every pop has been sold. It's been some sort of a relief pop. Either, hey, they didn't say anything negative, hey, they didn't do, but there's lack of catalyst. Unless, Yellen comes out and says, I'm not going to cut rates for until next year. By next year, I mean like a year from now. Then that might be a pop, and that could sustain itself. But they're not going to say that. So I fail to see the upside catalyst, but I can see 100 downside catalysts. I'm not foreseeing doom right now. We need something new, but I'm more scared of the headlines downwards than upwards. I hope that makes sense. So be very careful with your positions. Be hedged. If you don't know how to hedge, reach out to me or somebody else. It doesn't take a lot to hedge. Whether you buy stocks or sell stocks and you don't do options, you can get into options to hedge your stocks, and sometimes you can do it for free. If you don't know how, reach out to me and I'll try to explain it to you. And as far as having a game plan, you can't set trades without game plans. When I set my trades on Tesla, I chose levels that they weren't darts. They were levels based on data. And I had a theory, and I stick with my theory as long as I see it's still truthful. And I evaluate my theory throughout the day, every day. And if my theory starts to break down, I bail or I change my mind. And hopefully I don't get gapped up or down and get blown out. So if you're scared of the minute gyrations in the market from the day to day, take positions that are longer term, far away from trouble, and you can sleep better. There are plenty of them, and they can return 20%, 15%, 10%, 30%. It depends on how aggressive you want to get. And they're fairly maintenance free. If you don't know what you're doing, join us or reach out to me, and we'll work something out. Nick Shaheen again. Boy, this might be a record. Almost 15 minutes right now. Create income with option spreads on marketfy.com. Reach out. I can help you become a better trader.